When I lecture about crypto, it's always a little bit strange because you're never quite sure what the audience's level of experience is going to be or the audience's level of interest is going to be. So I'd love to get a sense of the people in the room, a couple of things before I start. And as I said, I don't have sophisticated polling, no QR codes, we're just going to raise our hands. The first question I have is, how many people are familiar with crypto? And I'm going to give you three choices. Very familiar, not familiar at all, or somewhat familiar. So we'll start with who's very familiar. Okay, not familiar at all. And somewhat familiar. Okay. Again, this is great because it gives me a sense that we've got all different levels of experience in the room with this. And then the next question, and this doesn't have to go with whether you're familiar or not, but I want to know your opinions about crypto. So we're going to do love it, hate it, unsure. So love it. Hate it. That's a positive. Unsure. Great. That gives me a nice opening because hopefully today I will tell you a little bit more to help you learn some more about it so you can form opinions, but also talk about how we should be regulating things even if we're unsure about them. We don't need to love it or hate it to have a regulatory posture about how we should handle it. And in fact, that's the way we should approach a lot of regulation, is not deciding if it's a good thing or a bad thing when we're talking about business or innovation. The government's likely to get that wrong. How do we create an environment where the market can decide if something is good, bad, or that we remain unsure about it as a society through the market process? So let's jump in. What is crypto? So cryptocurrency is essentially digital money that doesn't exist in a physical form. And when I say that, I'm talking about money that exists out there on the blockchain. We don't have a piece of paper that says, I own this Bitcoin. We don't have a piece of paper that says, I own this much Ethereum. Rather, this is money that, or currency, because I think money is a little bit of a loaded word here and currency is a little bit vaguer, and I think we need to stay in the vague space when we're talking about crypto. This is money that exists, or currency that exists out there in the technological ether. Bitcoin was proposed in a white paper in 2008 by the pseudonymous inventor of Bitcoin named Satoshi Nakamoto. No one has any real idea who Satoshi Nakamoto is, and that is one of the interesting parts about Bitcoin, because when we talk about Bitcoin, it's truly a, what we would call a decentralized piece of technology, a decentralized currency. No one person is responsible for it. We don't even know who came up with the idea for it. And the idea here was the first real-world application of blockchain technology. I'll explain a little bit more about blockchain technology in a minute, but what the real-world application here was to create digital money that solves what's known as the double spend problem. We've had email for a long time. By 2008, you can send files back and forth to each other. But you couldn't send money back and forth to each other because if you sent a picture of the dollar you wanted to send someone, they could just copy that picture of the dollar over and over and over again. You could still use the dollar that you took a picture of. There was no way to ensure that when you sent something to someone, they would have the true, correct, and only copy of that thing going forward from there. The cryptography present in a blockchain and the Bitcoin white paper kind of were the light bulb in this process, solving this double spend problem. Blockchain is not just used for this currency concept. We're going to focus on it today because I want to focus on it from a financial regulatory perspective. But this idea of the double spend problem exists in all sorts of places that aren't just money. The title to your house, the deed to your house, a picture, a JPEG that you send to someone. None of these things could be sent digitally prior to kind of this blockchain technology becoming a thing without the fear that someone else would copy or reproduce what had already been sent. So this is blockchain basics. I'm not going to spend a ton of time here because it's not as relevant for talking about the regulation at the level that I want to talk about the regulation today. But what is kind of key about blockchain is this idea that no one person controls the system. Here, that is kind of taken here that you say the transactions requested, that comes from one person. I might be the person wanting to make a transaction. That transaction is loaded up with other transactions and sent to a decentralized network of computers that might be operated by thousands, tens of thousands, millions of computers across the world. These people operating these computers don't need to know each other. In fact, they likely don't know each other, and they likely don't know you. But those computers work together, and I'll say on the crypto front, solving some complex mathematical problems that I don't really understand too much about, and you don't need to understand too much about to understand today's conversation. That process creates what is known as the blockchain, which is a kind of permanent record of that transaction that then gets added to with new transactions, so on and so forth. The important thing here is that, again, no single person controls this outcome and can't control the process. So what does that mean? And why is cryptocurrency something that is of interest to people? And I'm going to talk today a lot about kind of the pros and cons of crypto. I want to say up front that a lot of this is talking about the potential for crypto, not necessarily saying that the crypto industry today or crypto products that are available today reach these goals, or that they ever will reach these goals. Some of this is theory, and some of this is the possibilities that we might be able to see. So there's kind of two different areas that I'd point to when we're talking about why crypto, and I would divide them into two places. One of them is kind of this philosophical idea about crypto. Why is crypto good? And the other is more of a technological advancement argument about crypto. What does crypto do better than existing systems? So let's start with the philosophy. A colleague of mine wrote what I thought was a very nice piece a couple years ago about cryptocurrencies and liberty. Because the 2008 Bitcoin white paper and a lot of very early crypto was built upon this idea that crypto and its decentralization was going to be a force for empowering people to act away from their governments, to give people more freedom. And I'm going to talk a couple of ways about how cryptocurrencies have the potential to enhance individuals' freedoms. One way is it allows people to bypass oppressive regimes and the money that those oppressive regimes put forward. You can kind of think about that in two ways. One, crypto gives you the option of transacting outside of your government's transactional process. In the United States, a lot of transactions run through the Federal Reserve's processes. Crypto gives you the opportunity to do transactions on a person-to-person basis without running them through that government process or without running them through Visa or MasterCard. But it also gives people the opportunity to choose the currency that they want to use. If you have a stable currency, that might not be a big deal. It might not be a great choice. A lot of people in the United States wouldn't choose to use a currency other than the dollar. But what crypto gives the option to is to allow people to make that choice, and particularly in countries where the currency might be subject to hyperinflation, It might be subject to a lot of volatility. Cryptocurrency gives people the option to choose something else to hold their value. And they can do that not just with Bitcoin, which itself is pretty volatile. There are cryptocurrencies that are pegged to the value of other things, and we call those stable coins. One of the most popular stable coins in the world, the most popular stable coin in the world is run by the company called Tether, and it's tied to the US dollar. So that gives people outside of the United States, in countries who don't have easy access to dollar bank accounts, the ability to hold dollar equivalents that would maintain value like a dollar does, instead of maintaining value like their home currency does. So that's one possibility for enhancing liberty through cryptocurrencies. Another is obtaining financial privacy. Those of you that were in my AML discussion group have already heard a little bit of a spiel on this, but I will give it again. Financial privacy is something that many people desire, but many governments around the world do not give to citizens. There's a lot of surveillance of financial transactions, and many people are in search of financial privacy that allows them to keep their transactions secret from the government. The usual question in response to that is, yeah. Criminals want to keep stuff secret from the government. Why would anyone else want to keep things secret from the government? Well, yes, criminals want to keep things secret from the government, but there are a lot of other reasons why people might not want the government to keep track of all of their financial transactions, particularly where people might be engaging in transactions that the government might not be a fan of, but might still be perfectly legal. Making political contributions to opposition parties, providing money to relatives in other countries that might not be favored countries. Providing information or providing money, there's a whole host of reasons here. But the general take here is that it is not, financial privacy is not only for those that don't want their money movements to be discovered because they're criminals, but rather how we spend our money is a very important way of showing who exactly we are, and we don't always want to show all of that to the government. I think in a good example of this, and a reason for privacy that moves into the next point about avoiding censorship was during COVID, Canada had some protests that were from the Canadian truckers who were protesting Canadian rules about, say, vaccinations and travel and other things associated with COVID restrictions. There were people who wanted to provide money to support these truckers' protests, and the Canadian government viewed that as a threat to the Canadian government because they could see that these transactions were happening, and they froze the bank accounts of people who were supporting these protests. Again, legal activity, an activity that many people who enjoy free speech would like to engage in, but because the government is able to see those transactions, they were able to stop them. Which brings me to my next point, is that crypto, by operating in this kind of decentralized space outside of an intermediary who could step in and stop the process, that intermediary being the government or that intermediary being a bank that the government told what to do, people can avoid censorship in its many forms by transacting in crypto. And finally, crypto is potentially a way to preserve property rights. A lot of crypto is built on this concept of code is law, saying that the computer code that runs this is what happens. You don't have to worry about whether a judge is going to say yes or no, or whether or not someone's going to cheat you, because the computer code is going to do exactly what the computer code says it does. And therefore, you can protect your property rights by engaging in this type of transactions using crypto, because it is more worthy of trust, which I don't say lightly and I don't think is always the case in the crypto space, but that's kind of the argument here. That's how you can protect your property rights in the crypto space. Let me bring you the mic.
Yes, so we talked about financial privacy that crypto enables, but today you said that government doesn't allow people to have their financial privacy, so why would they allow crypto in and won't do any regulation to limit it?
That's spot on, and we're going to talk some more about that, because I do think that that is what's helping drive some of the regulations as we get on. So hopefully I will get to that question as we move through, because I think that's a very good observation. So we talked about the need for money to be able to be digitized, to be sent over the internet. Central bank digital currencies are something else that can potentially solve that problem and are often seen as a competitor to crypto. I don't want to spend too much time on CBDCs today, but I do want to kind of draw the distinctions here between crypto writ large and a central bank digital currency. A central bank digital currency also does not have to be done on a blockchain, but many of the proposals out there now with them are blockchain based, so we kind of lump them together. Central bank digital currencies are authenticated by the government, they're with the direct oversight of a state authority, and they allow for the state to kind of pause transactions or accounts. So in many ways, the central bank digital currency is the diametric opposite of a true cryptocurrency system when we're talking about these ideas of liberty, even though there might be some technological similarities.
I think that I don't.
Oh, I was trying to give them.
I think that I don't quite understand the difference between a digital currency and me just Venmoing a friend and passing out.
Yeah, so good question. Because it often operates the same way to a user. The difference is that there isn't an intermediary in the middle of a digital currency transaction necessarily. So for a digital currency transaction, you can hold your money yourself, not in a bank account, and you can send it directly to the other person that wants to receive it, not asking Venmo to send it. Venmo is all big into cryptocurrencies now. That's good for Venmo. But what we've been talking about thus far are kind of the pure decentralized cryptocurrencies that don't involve an intermediary. We will get to the kind of concept of having someone in the intermediary space there.
Almost the same question, just about the bank digital currency. Like, what is the difference between bank digital currency that goes through the bank than just transferring money to a friend through Bit or through the bank account?
So central bank digital currencies can be of a bunch of different types of designs. When we're talking about a retail central bank digital currency, like the type that you would use directly to send money to a friend, the difference is right now the money that you keep in your bank account is kept on kind of the bank's ledger and it's backed up by the central bank reserves. Here, it's not really a ledger in the same way, it's an actual currency that is directly provided to you from the central bank through the intermediary bank.
The government can create more like this and there will be a digital inflation?
Yep, it would be treated like, the Israeli government's considering a digital shekel. It would be the digital representation of the shekel,
So it's
period.
It cannot be a substitution for the Bitcoin. It's just a digital coin. Like the Bitcoin cannot have inflation because the amount of coins are limited. So this cannot be a solution to the cryptocurrency.
No, although this looks a lot like a stable coin, which we talked about before, which is the digital representation of a piece of fiat currency on the blockchain. So you can have a digital fiat currency that's provided either by your central bank or by a private company like Tether. And I would argue, and will argue, that the private version is better because it does not have the government sitting in between every single transaction that you're making.
So I have two questions, but I'll start with the first one. In June, pro-Israeli hackers attacked the biggest crypto, like the biggest crypto bursa in Iran, and took away all the money that was there. What promise that the currency that we invest in the crypto won't be hacked as well? Because, and this is the second question, the technology is always getting better, and especially when the quantum computers are on the edge of being true thing that can hack all of the cryptography or most of the current cryptography. What promised us that it won't be hacked in 1 or 2 years from now?
Yeah, actually that's a great transition to my next slide. Can I get you, let me take yours and then I'll come back for the next slide.
There are difference between the digital shekel and the credit cards, the numbers in my bank accounts. Is there a difference? And if there is, what is the difference?
What stops the government from deleting people's money? Because the ledger book is by the government here, so they can do practically whatever they want. They can erase all Shahar's money and move it to Ishai's and just erase all the money.
Yeah, what stops them is it's just a bad idea. We basically have to trust the government to continue to back its currency in order to do that. It's very tenuous. This is where we have all of it's kind of backed by the full faith and credit of your government. And if your government wants to throw that full faith and credit out the window, that's kind of the razor's edge that we live on in this space. What's different about a central bank digital currency and kind of the money you have on your credit card?
Yeah, because today we don't really have cash in the amount in our banks. So.
Yeah, so the big difference here is that the money is provided directly from the central bank, as opposed to it being money created in part by your bank. So your cash, the shekel that you hold in your hand, is a reserve note that can be recognized by the central bank. In the US, I'm assuming it's the same thing here because that's the way money works these days.
But as a customer, I don't really have the option to go with my cash to the central bank. So
No.
So what difference does it make?
So the difference that it makes, practically speaking, is probably not a big one for you. But when you look behind it and what the government then has more access to is a big difference in terms of the government's visibility into your spending of your money. So I think that practically speaking, a lot of these things, if you live in a modern society that has money that basically works, practically speaking, your day-to-day might not change that much.
What is the motivation of the government to allow these type of transactions?
Not always great. I will get to that later in the presentation because that is a good question as well, and I do want to talk about that one in more detail.
I just, I'm trying to understand this myself. I just want to say what my understanding is what the issue is. And the issue is very much what Doug Friedberg talked about yesterday. That the big problem is money is politicized. And we want to have a monetary system that is not subject to the whims of politicians. It has integrity outside the political realm. So we want a system that's secure, that is liquid, and that has integrity outside the control. So the answer to date has been gold. But the problem with gold is not so liquid. It's hard for that to be a currency. It's still a backup thing. So the challenge here, if I understand it, please tell me if this is right or wrong, that whether we can set up electronically a monetary system that's outside of the control of politicians, where we know we have money that is readily transactable globally, that has integrity. Is that it?
That's part of it. I don't think that you have to buy into wanting to have a completely separate monetary system in order to be interested in or supportive of crypto at this point in time. 2008, Bitcoin, that was a major motivation for Bitcoin.
Is that the ideal, what I just said?
It is part of the ideal, it's a major motivation for Bitcoin, but when we're talking about regulating in this space, there are a lot of other things operating right now that have to be taken into account that don't have the end goal of only transacting in non-fiat currency. And in fact, let me move on to this next slide, which talks about kind of some of the technological improvements that people who are not looking for additional liberty or for an out to the US, to any sort of monetary system, might also find attractive about crypto. And one of the reasons I want to talk about this is because this is another kind of innovation that we're talking about in this space that comes from blockchain that we may be able to enjoy regardless of whether we want the entire world to have Bitcoin as a reserve currency. So these are kind of phrases that we hear about when we hear about the benefits of blockchain and how blockchain is a technological advancement. I think many of these things are the ideal at this point, and many of them represent trade-offs from the way that we currently keep track of money, securities, other types of assets. So one, borderless. You can send crypto all over the world at any time. It's really hard to stop people from sending crypto across borders. That is generally seen as a positive. Crypto's had a big uptake for things like remittances, because it is much easier to send money from someone's crypto wallet in one country to someone's crypto wallet in another country than trying to send them something through the banking system, which might take days, might get stopped by your government. So borderlessness is one of those things. Immutable. One of the things that the blockchain is not able to be changed easily. This is part of the process. This is why we don't know anyone. This is great if what you want to do is have an absolutely permanent record. There's trade-offs to that, though. How many times have you sent money to someone and realized you sent it to the wrong person? Venmo doesn't usually let you take that back these days unless you can prove that you were defrauded in some way, but Venmo has a way to get that money back. Crypto does not, which goes to kind of these questions about once something's been hacked and stolen, how do you solve that problem? In many cases in crypto, it's very hard to do so. That money is gone. You can't catch the thief because the money has already been moved. Crypto is, quote, transparent. The blockchain contains all of the information about the transactions that are provided to the blockchain. So the information necessary to make the blocks are there. Doesn't that conflict with what I just said about privacy? That crypto is good for privacy? Everything's transparent on the blockchain? We can see everything? We see some tensions here. Transparency can be a benefit. It can allow law enforcement to more easily track illicit funds on a crypto blockchain. But transparency can also be bad for people that don't want to transact out in the open. I'm going to walk your way while I talk. In fact, there have been a number of incidents over the course of the past couple of years where people with large balances in crypto wallets that can be seen on the transparent blockchain have been kidnapped and held for ransom by people who wanted to achieve their who wanted to get their crypto.
Thank you.
I didn't quite understand. Do you mean that every money that I send in crypto has all of the history of the previous owners? Or is it very easy to know exactly who has How much crypto?
Both. Both, but it doesn't come with your name. Crypto is what we know as pseudonymous. It is not anonymous. Everyone's blockchain wallet has an address. You might own 50 addresses, but the blockchain will provide information about where the crypto has been wallet to wallet to wallet to wallet. Yeah.
So, doesn't it involve more risks?
It can, which is why I want to be honest when we're talking about all of this, because this can be risky. And there are potential solutions to some of these kind of drawbacks that I'm talking about. But there are also questions about, immutability. That's good in some contexts, bad in others. Do you really want your bank to be able to reverse your transactions at will? Maybe not. So these are a lot of trade-offs that we have to think about when we're thinking about whether or not these are technological advances that we want. Cheaper. A lot of people talk about crypto transactions being cheaper. That can be true. It's not always true. Crypto transactions can be cheaper because there's less layers of a process involved, but they can also be less economical when the blockchain is very busy and you have to pay more fees in order to get a transaction done. So cheaper is an ideal. It's not always the case. Permissionless. This is the idea that anyone can operate in the blockchain system without having to seek permission from anyone else. That is what goes towards censorship resistance. That is what goes towards allowing people to creatively build things on the blockchain. But not all blockchains are permissionless. Blockchain can be used in a way that's permissioned so that you have a private blockchain and you have to be approved to participate in that blockchain. Instantaneous, largely true, but I think often oversold, but generally much faster than the US financial system or the world financial system. Again, if you want to send money overseas, you can do it via crypto peer-to-peer, and it will happen very quickly. That is a several-day process through the existing banking system. And composable. That goes along with what I talked about with permissionless. Typically, a permissionless blockchain is open source, everyone can see it, and you can build other applications on top of that blockchain, allowing people to kind of express their creativity, express their entrepreneurship, allowing people to bring more process to the existing blockchain. So these, I don't want to go into detail on all of the possible ways that this can change the financial system. I just want to point out that there are technological advances here in crypto that you can see some benefits for in the financial system. You can also potentially see some drawbacks. So I've thrown a lot at you about what crypto is and why it might be good, which kind of brings us to the question of, so how's it regulated, and why has it been hard to figure out how to regulate it? The crux of this issue is the fact that, kind of as I talked about yesterday, financial regulation is intermediary regulation, and it focuses on the entities that take your money and then do something with it. The process is looking mostly at the risks of the people in the middle. It does not tend to regulate what happens on either end. Crypto, while it does not always do so, can function without those intermediaries. And we've found and we've seen that where crypto is functioning without those intermediaries, it becomes quite a challenge to think about how to regulate it properly. But that all comes with a giant asterisk, because crypto often functions with intermediaries. Ta-da. A lot of the largest crypto things that we think of today, the big crypto exchanges. How many people were familiar with FTX when FTX kind of imploded in 2022? That was a centralized intermediary exchange. A lot of these stablecoin companies are centralized entities that run maybe a decentralized process, maybe a little bit more centralized of a process. So crypto is less of a challenge to regulate where there are intermediaries in the process, but because crypto can function without intermediaries, it becomes really hard to think about what do you do here and what are the actual risks that financial regulation is looking at. Crypto also, and I said at the beginning, crypto can be a lot of things. It doesn't just have to be what we're thinking of as currency or an asset. But crypto can actually serve a lot of different functions in the financial system itself. I think one of the problems when we've talked about crypto over the years is we talk about crypto. But crypto is actually a lot of different things. It's not simply Bitcoin. It's not simply Ethereum. It's not simply things that are traded on an exchange. This is a little bit more of an issue for the US because we have a very weird financial regulatory system that splits the regulation of derivatives and commodities from the regulation of securities. We're the only weirdos that do that, and it causes us a million different problems because it requires US regulation to figure out, is a particular crypto token a commodity or a security, or is it something else before we can even think about who's the one that's supposed to regulate it? That's a US specific problem that a lot of the rest of the world didn't have, but it still kind of rears its head when you think about, we generally regulate financial instruments like securities and derivatives differently than we regulate currencies. We tax them differently. We let people use them differently. So thinking about what exactly is crypto is a challenge in determining how it needs to be regulated. And I'll say, as we've picked up the question here of why would a government ever let you do crypto? Crypto is a challenge to regulate because it can fundamentally undermine government control of the financial system. It can fundamentally undermine government control of a lot of things because, again, this can operate outside of the government regulated financial system. We'll see as I get a little bit deeper in some of the different ways that different governments have responded to that. And I think it depends very much on the individual country's circumstances, how far they're willing to go in allowing something like crypto to function. So what do we do about it? I know I stood up here yesterday and talked to you about how we shouldn't be regulating the financial system as heavily as we do. And that I think you probably all took away from my talk. The answer was don't regulate it. I'm going to give you a different answer to crypto because it's pretty easy to say just don't regulate it. In fact, that's kind of the arch libertarian answer to this. It's not regulated now. You should never regulate something if it's not regulated. But it's not the right answer in this context, in part because of many of the things I've been talking about in the financial system already. If crypto is a financial instrument, we regulate financial instruments. And it's just not true that crypto is not regulated now. There's a lot of existing law in the US and in other regimes that might apply to crypto, depending on how you view crypto. But it's not sure that it would apply, and it's not sure exactly how it would apply. And that type of uncertainty prevents people, developers, entrepreneurs, users of crypto, from being comfortable with building in the space, with investing money in the space, with allowing their ideas to bloom in order to figure out if this is something that the market really wants. So we do need to regulate here, and we need to clarify and clear up the existing confusion about laws to determine that may or may not cover crypto. So I'd say there's two right questions that we should be asking once we've gotten past the it's not right to say don't regulate at all. The two questions that we should ask about crypto and about its regulation are, is there a principled reason to treat a financial asset on a blockchain differently from a financial instrument that is not? When you hit the don't regulate it argument, you end up with, so I've got a security right here, it's on the blockchain, and I'm not regulating that, but I got a security over here that's just a traditional, regular old security, and we're regulating that to death. Is that a fair system? Does that make any sense? And all that does is privilege crypto outside of the market function, telling everyone they should go to the unregulated, easy thing to do and leave the other thing behind. That's not the right answer either. So is there a principled reason that a financial asset on the blockchain should be treated differently from a financial instrument that is not? Yeah.
Well, I don't think that many people know this, but when the crypto, the Bitcoin was
Suggested to the whole world, you said 2009, and it's not coincidence that it was just a bit after the 2008 subprime crisis. And the person that created the Bitcoin has tried to find solution for the problem that caused the 2008 crisis, which are mainly, let's say, intervention of banks and rating agency and governments within financial assets, like the most known mortgages-backed securities, that eventually cause people to lose their entire pension and all of their money. So that could be one argument for looking at Bitcoin, for example, as a different financial assets than mortgage-backed securities that eventually caused collapse to the entire economic society.
That's true, and that's fair. I don't think that asking this question leads us to the answer that everything has to be regulated as it's currently regulated. And you're right, Bitcoin was a reaction to the 2008 financial crisis. It was a way, as Bob was saying, to get a currency that functions outside of this kind of discretionary government mess. A currency that could be stable, that would not be impacted by the political wills of the government. Again, I think we have a lot of things in the crypto space that aren't Bitcoin these days, which leads us to having the broader question.
I also wanted to ask about the stability of the Bitcoin and the cryptocurrencies. I hear that a lot, but in any case of some kind of electric emergency hitting critical infrastructure, you can't access your money at all if you don't have a computer. And sometimes during wars, during these crises or others, these things tend to happen. So it doesn't secure from that.
It's not secure from that, but actually neither is the banking system in that case. So it's not a perfect solution. There's nothing here that is a perfect solution. I would say when Russia invaded Ukraine, the United Nations, the refugee agencies in the United Nations used cryptocurrency to send funds to people in Ukraine because the banking system didn't work. Now their electric system, you're dependent on the access to technology here. You're not dependent on the access to the bank. So again, we're talking about trade-offs. Which one do you want to pick? And then we need to ask, how should laws be updated to deal with these realities?
I don't know if this is helpful, but I think in a sense it is regulated, because today if somebody wants to buy something in the real world, he has to convert his Bitcoin or whatever it is into dollars or whatever, or any currency of the country. And when he does that, he sort of like moves into the open, and then he's taxed and he's regulated like everyone else. And usually also he has to go to an accountant and have the disclosure about all his crypto assets or whatever he has. So even if crypto is not regulated inside the exchanges as dollars are, in that sense it is kind of regulated.
Absolutely. So The idea that crypto isn't regulated at all is kind of it's a false flag. So people that tell you it's not regulated, in the US we call that it's out in the Wild West. It's not a good description of what's actually happening with crypto in 2025 or what was happening with crypto in 2015. So I want to kind of talk about where I see the general principles of a crypto regulatory model should focus on. And these are very high level. I'm sure we're going to have a good discussion about this. Actually, then I need to move along pretty quickly because we're having a good discussion already. First, we should be looking for regulations that don't interfere with innovation. That has been a problem with some of the regulatory uncertainty that follows crypto in the financial system. That has interfered with regulation because people aren't sure what they need to do to be compliant with the law. And when they're not sure what they need to do to be compliant with the law, they don't want to do it because it's dangerous. It might be expensive. It might wind you up in jail. Why not better focus your efforts on something you know is going to be legal? So we should focus on having laws that provide clear lines and laws that don't require people to seek government permission before they're allowed to take action. Clear lines help a lot with that. When the lines are unclear, you usually have to call up your regulator and say, if I do X, Y, or Z, are you going to come after me? Again, that's not an attractive way to encourage people to innovate and encourage people to try new things. We also should think about crypto differently from a lot of the traditional financial system because of its ability to have peer-to-peer interactions that don't involve an intermediary. A lot of financial regulation is focused on intermediaries because intermediaries create a certain class of risks. It's the risk that if I give you my money, you're not going to do with it what I ask you to do. It's the risk that if I am investing in you, you're going to lie to me about what my investment is going to do. When you are in crypto and you are dealing with a peer-to-peer transaction, you don't have those same kind of principal agent risks that are really one of the core focuses of financial regulation. Peer-to-peer behavior should be a reason to regulate it differently than we regulate traditional financial markets. And then finally, this is kind of the overarching regulatory theme that we hear from basically every government that's tackling this. So this shouldn't be anything that's particularly new or particularly wild coming from me up here. We need to think about whether or not crypto is presenting the same risks, and then we should think about whether it deserves the same regulation. This can get tricky because a lot of the technology in crypto is meant to mitigate certain risks. So maybe that means the regulation looks a little bit different because the risk looks a little bit different. It doesn't mean that regulation needs to be completely the same for both traditional and crypto finance. But it does mean that when we're focused on a risk in traditional finance, we should be checking to see if that same risks exists in crypto finance, and if so, they should be regulated similarly. Maybe not the same, but similarly. Yep.
Talking about the risk, so a risk from a different sense, I'm wondering about the connection between the black market that starts to heavily rely on cryptocurrencies, and how can countries even begin to combat it, or, yeah.
Yeah, so it depends on what exact part you're talking about, what the answer is. But I think in a lot of these circumstances, I like to focus not on the criminalization of the money, but on the criminalization of the activity that the money is facilitating. So it can be difficult to deal with black market issues, but your concern tends to be in what the black market is facilitating, not the movement on the black market itself. And I do want to throw up one additional point that goes back to your question about hacking. These principles are largely related to financial regulation. I do think that there is a broader conversation to be had about how do we think about cybersecurity, how do we think about the integrity of the code and the integrity of the blockchain. Those are not necessarily financial regulation questions, they're more technology questions, and whether we need government intervention there or whether this is a question that kind of private consortiums and private standards can solve is another question. But I take a lot of those questions outside of the realm of financial regulation, and these principles apply in the financial regulatory space. I'm getting my steps in.
I really don't I know how the blockchain works and everything, but I really don't see how the government could regulate the blockchain itself, if not at the beginning, at the end. What this means when someone buys in and checks out of the blockchain, because effectively there's no way for a government to interfere in the blockchain itself. If not in joining force with the blockchain and then for example resolving blocks and helping the blockchain to produce more faster and smaller fees for the transactions.
Yeah, I think that's right. I think that there's the danger here in the kind of government regulation and what I'd call the middle of the space is that it's very hard for the government to shut this down. In fact, I don't think it's possible. But when you have kind of the threat of prosecution of people who are engaging in the behavior, whether it's the computer or not, or you have the threat of legal sanction for, say, selling a security over the blockchain without providing the proper disclosures, people are less willing to undertake development. They're less willing to try. They're less willing to innovate in this space. So a government can't shut it off, but a government can seriously depress the interest in its use by maintaining, I would say, unclear rules or harsh rules that punish people who, if they're caught, would face consequences for acting in this space. Okay, so I'm gonna go, we're running light, so I'm gonna run pretty quickly through this. US regulatory approaches for the past 4+ years, not including 2025, were pretty hostile to crypto across the board. There was an enforcement crackdown with our securities regulator. Banking regulators were known for debanking, taking away the bank accounts from people that were involved with crypto activities. And none of this was helped by the FTX meltdown in 2022. Prior to 2022, there had been some movement towards clarifying regulations in the US coming out of Congress that looked somewhat bipartisan. The problem was FTX was heavily lobbying one side of the aisle, and when FTX blew up, that side of the aisle completely walked away. And the US kind of ground to a complete halt with both a hostile administration and a hostile to unable to do anything about it Congress. Donald Trump has taken a completely different view of crypto. Starting in about 2021, he was initially a Bitcoin skeptic who said he didn't know what you'd do with it, and he decided in about 2021 that crypto was great. He launched an NFT series for himself, made a lot of money, and completely changed his worldview on crypto. That is now resonating throughout the US government. In fact, arguably part of his stances on cryptocurrency were integral to his election. You can argue that point. I think it's overstated in the US often, but it's not a crazy point to say that crypto bros helped get Trump elected. His view now is that he is going to make the United States the crypto capital of the world, whatever that means. But that does mean that we have seen a lot of movement towards creating a more clear and more crypto-friendly regulatory environment in the United States. It kind of goes to the question of, again, why would a government want to support crypto? because the government sees money in supporting crypto, whether that's personal money or whether that is money in terms of attracting business and developers to that country. The rest of the world has been taking, let's say, a host of different approaches to crypto over the same time period that the US was engaging in its crypto hostility phase. And why is that? One motivation for taking a different approach from the hostile approach, even though crypto can be threatening to governments, is that governments saw this as an opening to allow for catching up with the US financial system. While the United States was laying far behind, it was a potential opening to create crypto-friendly regulations that attracted business away from US shores and potentially attracted financial business away from US shores. And on the flip side of that, there has also been regulation happening across the world that is focused on trying to prevent crypto from operating outside of government control. These tend to focus on regulation related to anti-money laundering laws and regulation related to stable coins. I am going to spin through this exceedingly quickly because we are running very low on time. But there's been a host of different approaches. The European Union in 2022 put into place kind of the first comprehensive crypto regulation called the Markets and Crypto Assets Regulation. Everyone was really excited when this went into place in the crypto industry because it was clear. The problem has been that it is clear like an EU regulation, which means it is clear and hard to deal with. So this has not brought kind of the crypto company boon to the European Union that they were hoping to see. Asia has taken a variety of different approaches, with China being primary here, and that China has largely banned crypto, except in Hong Kong, where crypto is thriving and there are a lot of crypto companies operating. And China is very supportive of crypto in Hong Kong, even though they don't want the rest of the country to use it. The Middle East, the focus here has been in the UAE. Again, the UAE has been mostly motivated by trying to attract business and has had a split approach between Abu Dhabi and Dubai, where Abu Dhabi has been focused on institutional adoption and Dubai has been focused on retail. And we get to Israel. Lots of high tech here, lots of crypto interest, but Israel seems to be in kind of a similar place to the United States, not in the hostility, but in the fact that there continues to be some regulatory uncertainty as to how crypto is being regulated. Markets are more open for it here, but there's no comprehensive regulation. And the focus here has been in large part on AML compliance, anti-money laundering compliance, investor protection, and market integrity. What I think is interesting here, this is a survey from 2024 of the top 40 crypto adoption countries. What I think is interesting here is when you look at these, I will note something really important here is that China is pretty high on the list for a country that's banned crypto, which kind of goes to the point that, yeah, you can't really shut this down. And you can also just take a look and based on what you know about geopolitics, take a few guesses as to the differing motivations that people may have in these countries for wanting to use crypto. Vietnam is always very high on the list. Vietnam has a very high population of people who do not have bank accounts and are using crypto as a substitute for banking. The United States, also very high on the list, despite our hostile crypto regulatory environment. But what's interesting in the United States is the drivers behind cryptocurrency adoption in the US has been much more heavily focused on our minority and lower income populations who are looking for alternatives to the banking system. I find this map fascinating. There is a wide variety of different types of crypto regulation that have been happening. But I think what I want to focus on here is the potential pitfalls. I talked about the basic principles that we should be following when we're thinking about regulating crypto. But we also need to pay attention to the pitfalls if we don't implement those regulation principles correctly. And I would say we'll split that again into these kind of two categories of crypto as a principled vehicle for obtaining more freedom, and talking about it as technology. On the freedom front, if we overregulate crypto and it doesn't meet its market potential, we're basically left with the status quo of the existing financial system. Existing financial system works relatively well for some of us. It works relatively well in the US. I think it works relatively well here. So maybe it's not a big loss for us if we don't get crypto to go forward. But what I think we need to kind of take a step back from and is think a little bit more about the things that we might like in a financial system, that even if our transactions get processed in a timely fashion, even if we have access to bank accounts, we might like some other things in our financial system that we don't currently get. The status quo right now has heavy surveillance of financial transactions. Our currency is tied to the fate of our government. Again, might not be something you mind if you have a lot of faith in your government. My government spending is giving me not as much faith in the long-term viability of the dollar. But right now I don't have an option out of that unless we have something like crypto to turn to give me the freedom to have those choices. And the existing financial system is censorship prone and property rights contingent. You have intermediaries and the government who have control over your money for you. Now, if those intermediaries are behaving in a way that you like, that might not be a problem. But we should always have in the back of our mind, what happens if that changes? Right now, if crypto does not exist, we don't have another good option to achieve the type of censorship-resistant financial system or the property rights protective financial system that we might want. On the technology front, I think it's a little bit more simple and a little bit less heady. As I said, crypto is not necessarily a slam dunk on every single one of these potential technological improvements. Sometimes the promises that have been made haven't been met yet. Sometimes the win, like immutability, is something that has some pros and some cons. But if we overregulate or focus on the wrong things in regulation, we're putting up high barriers to entry to innovation, and we maintain ourselves where we are today. That's nothing better than technological stagnation. And regulation should not be a burden from allowing us to try new things to determine whether or not the market thinks immutability is a good characteristic, or whether the market thinks that decentralization is something that is valuable. That does not mean, however, that we should, I'll come back to that one, that we should be pushing crypto over other options. We need to be careful in designing crypto regulation that we're not seeking to make any particular country the crypto capital of the world. We should be looking to create regulatory environments that allow innovation and allow the free market to determine whether or not an innovation has value. We need to balance the interest in regulation. Should not stand in the way of innovation, but regulation itself does not need to push innovation either. Right now in the United States, there's consideration of a bill to require innovation to become one of the principles of the Securities and Exchange Commission. That would require it to be part of its mission. So its mission would become protecting investors, fair and orderly markets, facilitating capital, and innovation. Not a great idea, in my opinion, because the market is the one that determines whether or not innovation is good or bad. not the regulator trying to push innovation to happen. The regulatory environment should not stand in the way of innovation, but it shouldn't preference innovation over the existing world either. So there's a couple of other ways here that the US is kind of considering putting the thumb on the scale in favor of crypto. One of those is giving crypto special tax treatment. There's been talk, and I think they will move this way, to not impose capital gains taxes on small crypto transactions so that crypto can be used as a transactional currency rather than simply as a store of value. But there have been proposals in the US to have capital gains tax apply to no crypto. So if you made millions in the Bitcoin that you're holding, the US might say, you don't have to pay tax on that. That obviously distorts the market incentive for holding Bitcoin. It becomes a much more valuable investment if you don't have to pay tax on it. As well as ideas like the Bitcoin Strategic Reserve. We talked about gold reserves last night. There are proposals in the US and in other countries, some other countries have been starting to implement these, for the governments to buy Bitcoin and hold Bitcoin. That is a much longer conversation about why it's not a great idea, but it is another way in which it would be preferencing crypto over the existing financial system and putting the thumb on the scale instead of simply letting the market determine whether or not crypto has value. I'm going to come back here because I think this is an interesting question. We've kind of talked about each of the different regions quickly and how they're tackling crypto. But crypto, in its kind of uniquely borderless way, isn't going to be subject to regulation in the same way as we've thought about it before. It's very easy to subvert your national regulation. It's very easy to have regulation that would apply globally just because you're the biggest market. And the question is, how do international regulators deal with that kind of uniquely borderless way of crypto's operation? And I kind of just leave the open question about whose laws will lead the way. This is a question that we deal with in a lot of different contexts, and I think it's difficult. International bodies try to harmonize, they don't really get there. Crypto will stress that system and is going to stress the ideas where we have different countries coming at this from different perspectives. Countries that are unwilling to give up government control over currency versus countries that view giving up some government control over currency as a way to build business. Versus countries that think that certain types of crypto transactions represent fundamental rights, such as being able to custody your own assets. This is going to be a big question over the course of the next 10 years. I hope that what comes out of it is a system that follows the type of regulatory principles that I put forward, rather than one that is focused on government control. Now we do have some time for some more questions, so I'm happy to take additional questions.
Based on the fact that the crypto world has like a bad connotation because of it started in the black market and was used by the narcos and so on and so on and so on, and also by the fact that no one knows who really this Satoshi Nakamoto is, and there is like a million Bitcoin wallet that no one knows who owns it. Do you think that eventually government will switch to applying like their own blockchain? They will implement their own blockchain and slowly switch like from fiat to a blockchain system?
So is that kind of a question that will we just move all the central bank digital currencies?
Potentially or partially.
Okay. I think there's going to be a push for that to happen, I think it's the wrong choice. And I'm not sure that it's because of how crypto started. I think it goes to the fundamentals that crypto is inherently undermines government control over its populace. Controlling your money is a good way to control your activity. So I think that there will definitely be a push that direction. I think it's unwise, and I think that some of the narrative around this needs to change a bit, because I'm not going to deny that crypto's been used on the black market. I'm not going to deny that crypto is used for illicit activity. It is. But it has also been a increasingly decreasing percentage of the crypto volume of transactions over time. And it is also a very small portion of the larger kind of illicit finance picture. Most of that happens and continues to happen in government-backed fiat currencies, not in crypto. And in fact, I have a quote ready for just that one. I have to pull it up. Because there was a lot of talk, I'll say after October 7th, about Hamas having received crypto donations. And there was some incorrect reporting by the Wall Street Journal about the value of those crypto donations. The Wall Street Journal ended up reporting a number that was wildly overestimated as to how big the donations were. At that time, the dialogue in the United States, as I assume the dialogue in much of the rest of the world, was, how do we shut down crypto? Because look at all of how these terrorists are using it. Crypto is used only for crime. It was a couple of weeks after October 7th, there was a hearing in Congress, in our Congress, and the former chair of the Israeli Money Laundering and Terror Financing Prohibition Authority testified. It was Dr. Shlomit Wagman. Okay. So she testified, and her take was, quote, "Let's not lose sight and focus from the big picture. Crypto is currently a very small part of the puzzle. The major funding channels were, and remain state funding. Iran and others, those are the major players. Most of the funds are still being transferred by the traditional channels that we all know from the past. Banks, money transmitters, payment systems, hawala, money exchange, trade-based terrorism financing, charity, cash, and shell companies." So crypto kind of gets this bad rap as it's only used by bad people for bad things. And not only is that not true, and is becoming increasingly less true over time as average people are engaging with the crypto ecosystem and using it for completely legitimate purposes. But it also kind of underscores the fact that illicit finance is not a crypto-specific problem. It is a problem that impacts the broader financial system at even a much higher rate, and we should not be kind of jumping to conclusions where there will be, I'm on the wrong page, where there will be consequences to the prohibition or overregulation because we are concerned about a problem in crypto that is not crypto specific. So crypto needs a bit of a rebrand on that front, and I think, not that that's going to save it from the governments, but I think it's a very powerful argument in favor of why the end result here should not just be the government has its own blockchain.
I will continue what you talked about now, and we just saw in the story how money can make power. And even if it's a small case, it has a lot of power. So I think we need to make sure that the good come over the bad, and know where is the red flag that we say we need to stop or to put more regulation, especially in the storages you just said now.
Yeah. Well, and I think it's worth bearing that in mind. And I think it's also worth bearing in mind when we're talking about things like illicit finance, that we, as Hanal said, we still need to move crypto when we're using it. We generally need to move it into fiat currency in order to spend it. There's not a lot of transactions that are happening where you're going to buy a pizza with Bitcoin. And all of those entry points and exit points from the system are subject in every country that cares. So every country that actually has an illicit finance monitoring system, those types of transactions are subject to the same type of anti-money laundering and illicit finance checks that movements of fiat currency are.
Coming back to the map we saw earlier, I wonder how to explain countries like Vietnam. I found it very interesting. I was very surprised because I expect that the more a nation is educated, the more likely it is to use, or a group, not a nation, to use cryptocurrencies. And it really surprised me, and also minorities.
Yeah, so I think it's an interesting question because I would tend to agree. There's a lot of people, at least at the outset, you think, well, crypto's kind of complicated, right? And a lot of times, particularly over time, if you look back a couple of years, it was even harder to access. It takes a fair amount of sophistication in order to really access the system. But I think I'd give two responses to this. One is crypto has gotten more accessible over time. There has been a lot of focus and development on user interfaces and other things that make it easier to access for people that are not technologically savvy in the same way. That's business. Business is doing its business thing and trying to find its consumer. But I think the other part of it is when the current financial system is not serving you well, you are willing to jump through more hoops to find something that does find a way to serve you well. I would say Turkey is another example. Turkey had high crypto adoption because of the, I would say, crazy inflation of the lira. Again, you don't tend to think of most of Turkey as having the educated populace that is likely to be involved in lots of high-tech things. But when you are facing a crisis where the money in your pocket is inflating away on a daily basis, you are highly motivated to find a way to make that stop.
So the more I think about it, the more I think this does not solve the problem. Because, first of all, you have to define clearly what the problems are you're trying to solve. But I think it's important to appreciate, which I think is true, is commodities and money are not the same thing. Money is not a commodity. Money is a means through which we do trade in commodities. So if you accept this, then the characteristics that you need in money is that it's stable and liquid. And as far as I understand this phenomenon right now, it is anything that's stable. How in the world can you have a monetary system where the money is changing value dramatically all the time? So in order to solve the problem of currency, you need a system that will maintain stability in pricing, so that you can have a free market in commodities. I think right now, crypto is a commodity, it's not a currency. And if you want to make it a currency, you wind up with the same challenges that we already have. So the only answer to it is gold. And possibly crypto is some kind of technical way to deal with it or whatever, but it does not solve the problem. And also, as you mentioned, we still are left with the problem of national autonomy. There's no way you can forego that. As long as you have nations, you need to have autonomy. Let everybody do their own business and do it. So you need to have a system, which I think, generally speaking, except now, the only solution is gold. It keeps a discipline on the currency. But right now, Bitcoin, as I see it, is a commodity. It is not currency. And if you want to make it currency, you wind up with all the exact same problems that we have now.
Bitcoin is not a currency. Bitcoin does not meet the definition of a currency. It does not meet the definition of money. It is not used regularly to transact. And given its volatility, it is unlikely to become a currency. I think it's one of the reasons we often don't say cryptocurrency anymore, is because everyone's kind of gotten away from the idea that this is going to be some sort of mass currency substitute. There are people that will disagree with me about that on the Bitcoin side. There are people, I say in the US, at a place called the Bitcoin Policy Institute, that think that I would be nuts for saying that. No, Bitcoin is the future. So I give you the fact that I am not the only voice in this space, but Bitcoin is not a currency. Really none of the crypto that exists today is in any sort of danger of replacing any currency anytime soon. The way to think about these things often is more as a token that is allowing you to make transactions within an ecosystem. That may very well be the ecosystem that I can send you money in another country, and you can send money to me, and then I turn it into actual cash. But it's much better to be thought of as kind of a utility function here that is representing something on the blockchain, not that this is some secret currency that is going to replace the dollar, the shekel, the euro. That is not likely to happen anytime soon. Never say never, because I never say never about anything, but it does not appear to be on that trajectory. But that doesn't mean that it's not a valuable innovation, potentially, or that it does not provide us additional options for how we choose to order our financial lives, regardless of whether or not it meets the definition of a currency itself. And I think the ultimate takeaway here is that we don't want a regulatory system that is going to make that decision for us. We would like a regulatory system that is open to innovation. An argument I make sometimes about this is, it's okay, so maybe it's not blockchain. Maybe the market decides that blockchain is not what it needs. But those that are working on blockchain today may be moving forward to other developments that we have yet to foresee. By foreclosing their ability to try in this space, we have foreclosed a butterfly effect of chains down the line that may very well put us back in other innovations, technological, financial, or otherwise. The regulatory system that we should strive for is one that doesn't unduly restrict the ability of people to take these chances and to let the market decide whether or not the product is worth buying. Yeah.
Just one small comment is that I think when crypto came out, and people were worried it would be challenged in terms of like terrorism, but it also has advantages for like when you're fighting terrorist financing, because it's much more trackable than money.
Yeah.
So if you manage to figure out what wallet belongs to which terrorist, then you're basically in a much better position to deal with it compared to actual money, or even the regular financial system where you have to deal with banks and countries and whatever.
Yep. I would say, in fact, there was a point in time when a few terror groups said, please don't send us Bitcoin because it's too trackable. There are some caveats to that. There is technology in the cryptocurrency space that's aimed at providing additional privacy. I tend to like that because I tend to like privacy, but there are certainly arguments against that. And we've seen, I skimmed through it very quickly, but the Abu Dhabi and Dubai regulatory frameworks both explicitly prohibit that type of technology under their regulatory frameworks in order to maintain the type of transparency that you're talking about. Okay.